this is actually exciting, right? So now we have this market trend, right? As you can see, we've been going up, we're forming high and higher highs, then we take this high, to form a new higher high, and we form a higher low, and then we form an order block. So now I want you to see something, right? Remember, the normal markets, how they go is they go from a high, they form a low, they form a higher high, and they form a higher low, and they break this high, forming a new higher high, right? But what happened here is, after forming this high, we formed a higher high, a higher low. We formed a higher low, right? But then we didn't break out this higher high. The market didn't have momentum to continue on the bullish trade trend, right? So we couldn't break this higher high as normal as the market would. For example, it was gonna be like this, but now it is as if there was no momentum to break that high, that higher high, right? And then we formed a high. We just gonna call it a high, right? So in this area, there's usually a consolidation, and in that consolidation there is an order block, right? So I trade order blocks and supply and demand. So some people call this whole area a supply zone, right? But what is most important is that there is an order block in that supply zone, right? So now we drop and then we take out this low to show that, okay, from this uptrend we might have a change of character here, and we might be switching from going to the upside and going to the downside, but this whole scenario is not confirmed yet, right? And remember, on the last setup we did have this, and we call it inducement. When the market forms two highs and takes them out again, we called it inducement, right? So these are two highs that the market created, and we also specified that this is a trap zone. We are trapping the fair value gap traders, right? Remember, there's many types of traders. There are people who trade on the fair value gap, and it works, right? All right, so there are people who trade on fair value gaps, right? And the market forms these two highs and then it takes them out, and we call this area inducement. Some people call it a liquidity zone, and but what's more important is we don't trade on this area. We wait for the market to take out these people right here and approach our zone. I call this an order block or a supply zone. Right, so now the more exciting part is what happens when we reach our supply zone, right? So let's look into this. We formed a high and then we formed a low, and then we took out that high, right? This is more exciting, and this setup always plays exactly the same, right? So after taking out this high, we formed a new higher high, right? But then look what happens is we don't form a higher low and then continue going up, but then after forming this higher high we broke out this low again. This can be confusing at the same time, right? Now we have this change of character. Remember, instead of just continuing with the trend and going to the upside direction, like we formed this high, right, which is this high here, and then we formed the low, which is this low, and then we formed the new higher high. But instead of forming a higher low and continuing, we broke out all these lows, right? Okay, So after breaking out this low, we had a lower low. This is signaling that this supply zone is powerful, and it makes the market to change its character. So when the market visits again, we check an order block on this area right here. So what you can do is you can also use a Fibonacci retracement tool. And I always say the best areas are between 60 and 70. As you can see, this QML zone is at exactly at 60%, right? So there's usually an order block in this area, and that's where we take a short, right? So I don't want this video to be too long. I will make another video explaining a change of character when we have approached our zone, right? So this whole scenario is just so exciting because it traps a lot of traders. And if you know these institutional price action concepts, you're not gonna fall a victim